Good morning. It's Market Day Report. Welcome. We're halfway through the week, aren't we? Well, not quite, but we are into a Wednesday, so that's kind of like halftime, right? Okay. How have we been trading in the overnight session? Let's jump right into the markets. Corn market has been higher. Remember, we settled higher yesterday. That's 2 consecutive days higher for the corn market. December in the overnight session, 452, up 3.5 cents. What about soybean trade? We've had a pretty good run on the new crop beans, 3 sessions higher on November, and overnight up 8.5, 1049.5. What about soy meal? Well, soy meal has been mostly lower over the last week, though it did bounce higher yesterday. And in the overnight trade was higher. Remember, we had a flash sale of meal and cake to the Philippines to start the week. And soy oil moving higher in the session yesterday, 2 consecutive closes higher, and in the overnight, higher as well with 50s across the board, one exception, that front month, July. All right, let's run through wheat now, 6 cents higher in Chicago. 552 for hard red, 542.5, up 6.25. Minneapolis, December, 633.25. Top end of the trade range, up 4.5. And in New York, cotton futures in the overnight session lower, 68.43, down 31. Let's go to Springfield, Missouri. President, Midwest Market Solutions, Brian Hoops. All right, Brian, I hung around a little late to see whether or not USDA had a flash sell for us overnight, and no go.
Right, you might be disappointed. Nothing to report. So this week we did have the meal sale that you mentioned, but nothing for corn and soybeans. South American harvest, especially in Argentina, it's been delayed a little bit, and that encouraged a few more sales of U.S. soybeans and to an extent U.S. corn. But now that they're caught up on their harvest pace, back to maybe a more normal pace, those sales are expected to slow down, and we're starting to see the effects of that. And as a result, you know, the higher prices you mentioned overnight, they were led by the new crop contracts, not the old crop. And so it's a little bit of bear spreading to start our morning off, which is not necessarily a bullish indication. The new crop contracts, I think, are getting some support because of the wet forecast for that eastern corn belt. Now, the western belt's in great shape as far as moisture goes and emergence, and a lot of our producers and are telling us how things look are just amazing right now. We're off to a very good start, but that eastern belt, there is some delays there as far as planting goes. And it's a little too early to be talking about prevent plant yet, but there will be some talk about that, whether we get prevent plant, whether it gets switched over to a different market, or what happens. And that's enough to get, you know, a little bit of premiums being put in the market to encourage those farmers to go ahead and plant corn or soybeans yet in their areas if they are behind. So a lot of talk about that. A lot of switching maybe from corn over to soybeans. Heard some nitrogen being pushed back onto the suppliers as they go into soybeans more. So we are seeing a little bit of a bounce in the new crop contracts because of that. And then you get in the extreme western part of the hard red wheat belt, Kansas, Oklahoma, Texas, those western areas, they're missing out on these rains. It's been very warm in a lot of those areas. A lot of 90s reported last week, maybe some again this week by this weekend. And they are seeing their crop being hurt. We saw crop condition ratings yesterday, or Monday, I should say, down a couple percentage points. That hard red wheat crop could drop again next Tuesday because of Monday's holiday. Tuesday, when we have our next crop progress numbers. And that's helping to give us a little bit of a bounce here in the wheat market now, about 40 cents off of last week's lows.
And I talked to a couple of producers within the last week and a half, and I was surprised to hear a couple of them deciding to keep cattle out in those wheat fields and go ahead and graze it on out instead of worrying about trying to harvest it. They said they looked at the price and decided it would be better suited to have cattle on it. So that's another interesting thing we have happening there in that Texas panhandle. How about we take a break and we'll pick that conversation up on the other side of the break. We will talk cattle and hogs. Market Day Report continues in a moment. So again, USDA projecting pork production in 2026 to increase. That could put pressure on prices as we roll into the new year. Where are we right now, though? Well, after the session yesterday, mixed trade, front month up 77, July and August both falling. That July down a couple of pennies, dime lower on August, both holding the 103s. And then notice that deferred contract in October, and look how you fall off the cliff from 103 to 87. Let's go from there over to live cattle. What happened in the session yesterday? Mostly higher. June up 20 at 213.17. That expires at the end of the week. August contract 207.85, down 7. And to feeder cattle after that, I said the live cattle, I meant the May feeder cattle contract will expire at the end of the week. I'll get that straight. 296 was up 32, couple of pennies higher on the August. Let's bring back in Brian Hoops. Brian, 220 was the bids in Kansas. Didn't seem like anybody was biting on that, but they did get some bought at 219 with a delayed delivery for 3 weeks. What could that mean?
Well, yeah, it's very limited head, just a string of head that they need to deliver those out in a few weeks. Now, part of that is because Memorial Day next week, they're slowing the kill speeds down. I thought it's interesting that this week so far, we are ramping those kills back up ahead of Memorial Day. We're 15,000 head more than last week and just about even with a year ago levels. And that eventually will hurt our cutout values. But Packers trying to secure that inventory. They know numbers are going to be tight. This Friday's cattle on feed report is going to show us very tight numbers. On feed supplies about 98.5%, placements below 3%, maybe about 96.8% of a year ago numbers. And I think, if you're a producer, it's very hard to see these cash prices here in these summer months in that 219, 220 range and look at October and December 205, 206 and get really excited about doing some sort of a hedge and locking in those price levels, especially if they're at a loss. But, fundamentals here still remain very strong. Packers still very tight and kind of tipping their hand. I think that they are trying to buy cattle 3 weeks out because they know the numbers are really not there and prices could be much higher down the road.
Brian, great to see you. Thanks for the insight. Speaking of insight, in 4 hours, we'll talk with Randy Block, CEO of CattleFax. We'll dig in a little deeper on this cattle market and where we're headed.